Welcome to the Passive Mobile Home Park Investing Podcast with your host, Andrew Keel. This is the podcast where you can get the education you need to invest 100% passively in the highly profitable niche of mobile home parks.
Welcome to the Passive Mobile Home Park Investing Podcast. This is your host, Andrew Keel, and today we have an amazing guest in Mr. Gabe Petersen. Before we dive in, I want to ask you a real quick favor. Would you mind taking an extra 30 seconds and heading over to iTunes to rate this podcast with 5 stars? This helps us get more listeners, and it means the absolute world to me. So thanks for making my day with that review of the show. All right, let's dive in. Gabe is the founder of Kaizen Properties and the host of the Real Estate Investing Club podcast. Gabe started his career as a management consultant for Fortune 500 companies in Seattle, Washington. He soon realized the corporate world did not fit the vision he had for his life. It wasn't until he bought his first broken down triplex in Tacoma, Washington, that he truly found his path in real estate. He now repositions commercial real estate across the U.S. with a special focus on RV and mobile home parks. Gabe, we're excited to welcome you to the show, brother.
Andrew, thanks for having me on.
Yeah, man. Let's start out by just hearing a little bit about your story and how in the world you ended up in manufactured housing.
Yeah. Pretty much every person in real estate that I've talked to, my story is definitely not linear. I feel like that's kind of that is what you see in real estate is people they're starting on one path and they go a different direction and they end up in real estate and they're loving it. That's the same thing for me. Like I said, I got started in corporate. I was in Microsoft, but I always knew that I wanted to do my own thing. I wanted to have my own business. I really wanted to create my own schedule. That was like my main focus. So I was working at Microsoft. I was trying different things. I built a e-commerce company. I jumped into digital marketing, all these different side businesses, trying to find a way out, trying to find a way to make money, passive income on the side. It wasn't until, like I said, I did that first triplex in Tacoma, did a flip. Obviously, flips, they take a lot of effort. Hats off to all the flippers out there. It is quite a business. But I did a flip, and I think we made like $86,000 on that first flip, and that was the most I'd ever seen in a check. And I was like, okay, there's something to real estate. This makes sense. And so that was in 2014. It was a long time ago, and I didn't really jump into RV mobile home parks or even jump into real estate full time until 2019, 2020. And so there was a long period there where I was working corporate and I was still, on the side. I was flipping houses. I was doing wholesales, just kind of dabbling. And it took me, about 6 years to finally make the decision and jump full time into real estate. And I got there. It was 2019, 2018-ish. And I had, I'd done some flips, I'd done some wholesales. And I just got to the point where I was like, I need to make the decision. I need to make that jump, get into it full time. I had been networking a lot, meeting people. And somebody I'd met was going into mobile home parks. They had taken a course. I can't remember. It was the guy who does a pretty popular course, but
Frank Rolfe. The MHU boot camp, or is it Kevin Butt, maybe?
That's it.
MHU boot camp. Awesome.
So he did that, and he was really interested in mobile home parks. He talked to me about it. I had actually been thinking about going into multifamily, but then he kind of sold me on mobile home parks. You own the dirt, you don't have the broken toilets, all that jazz. And so I said, all right, let's do it. So we focused in on mobile home parks, started marketing. It took us probably 8 months before we bought the first one. 6 or 8 months. But once we bought the first one, we got that turned around pretty quickly, making some good cash flow. And a couple months after that, we bought the next one.
That's fantastic. So when was that, your very first mobile home park purchase?
That was I think we closed at the very end of 2018.
Okay.
Yeah. And so it was, I think we closed at the very end of 2018.
And tell us about that park. I mean, was it an RV park, an MH park? What did it look like? Where's it located compared to where you're located?
Yeah. So it's in George, Washington. It's just this little dot of a city in Washington State on the east coast of the mountains. Kind of interesting backstory to that city. This guy wanted to create a themed city in the theme of George Washington, that era of history. He was a potato farmer, and he that was his main business, and he had all the skills in potatoes, but he didn't have the skills in redevelopment. So he got started, but he didn't actually do anything with it. But he still owned all of the land and all the businesses in George, and so he was kind of parceling them off and selling them. And we ended up, we reached out to him, and we got great seller financing terms. He gave us, I think it was 10% down, and it was three something interest.
Nice.
And yeah, we got it for 5 years, but it was in rough shape. It was not like, your class A mobile home park at all.
Those are the best ones. Those are the best ones to cut your teeth on, right? The ones that are a little rougher. You get a firsthand experience.
Yeah, for sure. It was a lot of learning. That's for sure. But so it was kind of a mixed use mobile home RV. I think there were more RVs than there were mobile home. There are long-term stay RVs though, so it kind of acted like a mobile home park. It was, most of the workers there worked in the neighboring farms. So this area was it was farm-oriented farmland.
Okay.
And so there was a lot of Hispanics, which was great because I'd but earlier I had learned Spanish, and so I got to bring that out of my pocket and speak with the residents. But yeah, I said,
how many lots was that one?
It was 27 lots.
Okay.
And we're actually just now, I called the city yesterday. We're looking to expand. We're going to add, hopefully we'll be able to double the footprint, but who knows? We got quite a bit of land in that area that we can expand into. But it was in rough shape. Like I said, there's been a lot of changes. We had to redo the entire sewer system.
Oh, wow.
A lot of the pedestals had to be replaced. There is a duplex, or I don't know if it's a duplex, but there's a house just a really rundown house on the property. We originally were thinking we were going to turn it into a unit that the property manager could live on. But we ended up buying another property that was pretty close, another RV mobile home park. And so she lives on that property. So we still have this house. We haven't done anything with it. We really should. The end goal was to flip it and make it nice, but it's still there. But that was the first one. A lot of scars from that one, but it was a good learning experience.
Yeah, tell me about the sewer system. What was it? Private sewer, I'm assuming, and what did that look like? Having to replace all that?
No, it was public. Up to to the street, and so everything. It happened like probably 6 months into owning it. One of the tenants let us know that there was backflow, and so we fixed that backflow. A couple months later, it happened again. We fixed that one. A couple months later, it happened again. And so we just kept having this recurring issue. And you're like, what is the deal? We eventually dug up a portion, and this area, it's really flat. The land is very flat. And so people grow these huge, really, really tall trees to reduce the wind. Well, these trees, I love trees, except for when they're in the mobile home parks, because those dang roots,
yeah,
the trees had gotten into the roots and just completely decimated these lines. And so we had to dig them up, put in PVC and
wow.
Yeah.
What was it made of when you bought it? What was the sewer lines made of?
I think it was concrete.
Okay, concrete or like clay?
Yeah, I'm not good at just judging based on looks.
Okay.
But it was one of those two.
Gotcha. And tell me, so now that was 27 lots, cut your teeth. How many lots are you up to now? Do you have more parks? What does it look like since 2018?
Yeah. So after that, we bought another RV mobile home park. That one had 44 lots. That one is doing great. That one's on septic and well, which, everybody, when you're learning about mobile home parks, they all say, don't get septic and well. But the numbers on this were just way, way good. And the seller gave us 2.67% interest with 10% down interest or seller financing. So we were just like, we'd be dumb not to do this. And it turned out to be a great park. It used to be a KOA, or I don't know if it was a KOA, but that sort of style of property. It had this really big kind of convenience store / apartment unit / external public restrooms on the front of it, which was perfect for our property manager to live in. And then there was a whole bunch of mobile homes and then long-term stay RVs. And so brought that one in. that one again had a lot of things we had to do. We had to replace some septic system, which I had no idea septic systems were so expensive. It's just that was the first septic system I've ever replaced. It cost $36,000, and I was just like, Jesus Christ, how do you do this? So yeah, that one's doing really well. Again, we own both of these right now. They're doing great. Since that second one, I've I got really interested in just other asset classes, and I looked at self-storage. So I bought 6 self-storage facilities in last year, and that brings us to today.
Gotcha. So you just have the 2 parks under 100 lots. That's what you're focusing on. It's RV MH split, right?
Yep.
So my big question for you is, how'd you get educated on mobile home parks and RV parks before diving in? And what did that look like? I know you said you had a friend that attended the boot camp. Are you both partners with that friend in both of these deals?
Yep. We partnered on both the deals, and it was just really just looking online and reading about people who've gone through it. I listened to a podcast back in the day. Dang, I can't remember the podcast either, but I listened to a guy who does mobile home parks, his podcast. And yeah, it was really just going through BiggerPockets and reading about what other people have done. Real estate, I always like to say it's not rocket science. You need to have a general framework and understanding of underwriting and finances when you get into a park. Outside of that, if you get reports, if you have somebody come out and do inspections, it's not super crazy. And so we learned a bit, and then we jumped in, we got our hands dirty, and we've gone from there.
Yeah, it does seem like you got burned a little bit on the sewer on both of these. Had to get replaced. What do you think you could have done differently to, in due diligence, that maybe you learned, and if you bought a third mobile home park, maybe you do differently, since these two, the sewer issues popped up, pretty soon thereafter you closed?
Sewer scope, obviously. Just go in there and get them scoped. We didn't get the line scoped when we bought that first one. We just had someone go out there, and I think what they did is they actually looked at the mobile homes thinking that we owned the mobile homes, but we don't. We actually did when we bought it. We owned a few of the mobile homes. We promptly sold them to the tenants. And so what I think didn't happen was a scope of the actual sewer line.
Yeah, no, that's big. And then the move to self-storage, maybe you could share some light on that. I mean, I've gotten into self-storage as well, but I'd be curious, like, why you moved away from mobile home parks. Was there something wrong with these? I mean, maybe you could just talk briefly on that.
Yeah, so we were in mobile home parks. It was the properties themselves performed really well. And I always say there is an absolute need for evictions. It's a necessary part of the process, but it's not something I truly enjoy. And so I was looking at other asset classes that don't have somebody living on the property. And so I looked at industrial and self-storage. I really like self-storage, and just because it's very easy to automate. So I jumped in.
And tell me, would you say that, like, that was the hardest part of the business, or the toughest part of the business for you, was the eviction process?
For mobile home parks? Yeah.
Yeah. Okay. And is it, in the states you're operating in, is it a little bit more restrictive, being in Washington compared to other states from an eviction standpoint?
So I haven't owned mobile home parks outside of Washington State. They're both in Washington, so I can't really compare it to anything. But when I speak with other investors, other operators, they say that Washington is difficult, but I can't really make a judgment there.
Yeah. How long does it take, like, from start to finish, typically to get someone out?
So far, we have been successful using cash for keys.
Okay.
And
Nice.
so we haven't had to go through the full eviction process. It's just the drama that ensues when the eviction process does start.
Sure.
With self-storage, I have no qualms if somebody is not paying their rent, and they're putting their stuff in one of the units. I have no issue of starting the eviction process. But with mobile home parks, it can get difficult, which is just, it's just one of the things that operators, it's one of the things that you have to deal with. And it's not a good thing. It's a necessary part of the operations of the business, but it's just it's something, and I had always wanted to check out other asset classes. And so it's just something I decided to try out.
Gotcha. So, I mean, you got into these first two kind of, it seems kind of scrappy, right? Like they're a mix of MH and RV, and there's some seller financing, which seems like you got some really good terms on. Has your strategy changed at all since getting into these two? Is there like a new strategy that you would say, like on your next deal, that you're looking for?
Yeah, I mean, now I'm looking at bigger properties.
Hmm.
I'm still looking at self-storage, and I have my eyes open for really good mobile home RV park deals, but we're not actively investing a lot of dollars into our marketing for off-market stuff. I generally only look at off-market deals. I don't look at broker deals. Not that there aren't good deals out there with brokers. It's just I don't do that. Yeah. So now, I mean, I'm doing my first syndication with a 80,000 square foot self-storage facility coming up here soon. And so that's the last deal I did was relatively large too, for self-storage, and we raised capital for that. And so now I'm looking more at the syndication model. I haven't done it yet, so don't ask me questions on how it goes. I'm learning right now.
No,
But
that's awesome. That's really cool. And I totally get that. And without going down the rabbit hole of talking too much about storage, because I do like some aspects of storage, but as I step back and I look at my portfolio, we have 11 self-storage facilities and 33 mobile home parks.
mhm.
I prefer mobile home parks. Like if I could pick the same income, the same cap rate, I would choose mobile home parks. I'd be curious to see what you would pick.
So yeah, I mean, there's pluses and minuses for both, right? And that's the
What are
hard part.
those? Yeah, maybe you could
Um,
just elaborate a little bit on that.
yeah, it all comes down to when you own an asset, it really comes down to property management. Can you find good property management? Can you get good systems in place and somebody who can adhere to those systems and really, run the business well? For mobile home parks, I found it difficult to find good property management. And that is kind of the hang up that I had with mobile home RV parks. Not that they're not out there. Obviously, that you can find really good property managers. I'm sure you have really good property managers. It's more difficult with self-storage. I ended up finding a really good third-party property manager who is just crushing it. And so it kind of got to the point where I was just like, okay, this person is in place. She's really good. Their team is really good. And so, but the problem with self-storage is, first of all, you have way more people than you do with mobile home parks. A self-storage facility that, a $3 million self-storage facility is going to have 500 people. A $3 million mobile home park is going to have, could even have like 50 people. It's just huge. There's a huge difference in the number of people that you're dealing with. And then also with self-storage, one of the biggest issue that I've figured out with self-storage is vandalism. We just have so much vandalism. It might be the locations that we own our properties in, but we've been battling that a lot. And so if I were to choose between mobile home RV and self-storage, and we haven't really been talking just about RV parks. We've been talking about kind of like long-term stay, mobile home-esque parks. But even if I was thinking of just RV, something I haven't done, but it is something that would be that I might be interested in, just because you have this opportunity to be a little bit more creative in the alteration of the property, making it really enticing to people to bring in their short-term stay RVs. So this is a long way to say I'm not sure which one I like better. There are pluses and minuses to both. Right now,
yeah,
I'm in self-storage.
and I think also, yeah, like like you're saying, you're upgrading. You're going with an 80,000 square foot storage facility. In MH, if you go after a 80, 90 lot mobile home park that's all tenant owned homes, that's going to be a lot different to manage than these smaller ones that you have currently that have that RV component. But I think the big thing comes down to the low turnover, right? Like,
yeah,
it's been proven in my portfolio that less than 5% of the tenant owned homes move out every year. Like,
oh, wow.
when people own their homes, like, they stay, like,
Yeah.
regardless, like they're there. And that just provides more stability of the income and of the cash flow and more reliability. So that's the one thing. But in storage, the pricing is like such a big component, and managing that from a revenue management and dynamic pricing standpoint. And then also, if you're in a big market, it's kind of counterintuitive to a sense, because you're competing with these REITs that, have a whole team of people just working on pricing. And if you don't check it, every week, and they drop their prices on their, 5x10s, all of a sudden you're going to notice your move outs on 5x10s And you're like, wait a minute, what's going on here? Oh, well, they cut their pricing or they have a new promotion or something like that. And then the RV parks, I think are interesting, but again, it's the stability of the income stream, right? Like, and I always think of like the worst case scenario, like a recession, like what is an RV park going to look like, right? And I know a lot of guys are all big on RV parks right now because you can get in at some attractive cap rates and you can add value different ways, right? Like someone told me that you can, provide golf carts, and then they're charging people to use the golf cart while they're in the RV park, and they added like, it's more like recreational, right? They come there and they added like a like some recreational stuff, like a water park that was like these blobs and things that they can play on, and they charge like, per day. And it was interesting because those are ways you add value, increase the NOI. But again, when you're in the middle of a recession, do you think people are going to be paying for those little add-ons? Like I think at the end of the day, they're going to be paying for their lot rent where they stay. And same thing with storage, right? I think it's just it's interesting. It does have a proven track record in recessions, but it is still new as an asset class overall. So anyways, I know we kind of went down that rabbit hole, but it's
that is another thing that I thought about for storage is like how solid the solidity of the need, I guess, out there in society. Obviously, storage it's not a necessity. It's not something mobile home parks. People are living in these parks. They're, this is where their house is, this is where their roof is. That's a need. That's something that we need in society. But self-storage is not necessarily a need. It's just it's a nice to have. And like you said, the previous recessions in history, I didn't live through them, but I've looked at charts, and self-storage has proven to be recession resistant. I don't know if that means anything, but I still come back to the fact that it's not a necessity in your life. It's a nice to have.
Let's go back here. This is a question I asked all my guests. I say, what are the most important things that passive investors, if you're putting on a syndication, those LP investors, what do they need to look out for before investing into a mobile home park? Like, what would you look at if you were going to invest in another operator? What would you make sure to like ask the operator or check before investing in that deal?
I mean, the first thing is just track record. Have they done this before? Do they know what they're doing? Do they have a plan? It doesn't, I had people invest in my deals when I was very, very new. And I thank them for that. And I think they did because I had a plan, even though I didn't have a track record. Obviously, it's better to have people, to invest with people who have a track record. You said you have 36 parks. So somebody like you who has, tons of parks, a lot of experience, that's obviously a better sign than somebody who doesn't. So a track record, a plan, and then, if you're investing passively, it's always a good idea to just understand the basics of how to underwrite a park. You don't necessarily have to go through the entire process, but just being able to understand how the finances and how P&L works for a mobile home park would be good, because then you can ask for it and just kind of do your own, a little bit of due diligence and decide whether or not the plan that they tell you is a reasonable plan. If
it's big,
if they're expecting to double the rents and you don't think that's possible, then that could be a red flag.
And also, like, just from a standpoint of like ethically, do you want to be involved in a deal where the operator is creating value just by going to these people and saying, okay, your rent's $250 a month right now, next year it's going to be $500 a month? Like, that to me seems like a very lazy way to squeeze NOI, where when you're filling vacant lots, you're rehabbing empty homes, you're doing some capital improvements to the property. That's forced equity, right? That's putting true value into that. Some of these private equity firms, from the research I've done, they're using an equation based off of other metrics like median home price. And they're saying, oh, well, based on this metric, lot rents should be X in this market. Even though all the market rents are $300 a month, it should be $500 a month. So we're just going to go and rip the Band-Aid off.
Right.
And it's like, that's why we're getting a bad name in some of these bad articles that are coming out. And it's just, I agree. But going back to the underwriting question, or the underwriting point on reviewing underwriting just from a basic level, one thing I've seen a lot of, because I've invested passively this year in 5 deals in mobile home park and 1 RV MH type of deal. And one thing I've seen is some operators that are capitalizing the park owned home income.
Oh,
so it looks really good, right? The numbers are really great, but they're capitalizing at a 7 or 8 cap. the park owned home income, right? Where a bank's not going to do that, an appraiser's not going to do that. So if you don't understand what that means, the numbers could look a lot better than they actually, will turn out. So,
and that is my biggest pet peeve with looking at broker deals is they always capitalize there are specific brokers out there who are really good about it, but a lot of brokers, when they're selling mobile home parks, they capitalize the park owned home income. And so it looks like a 15 cap. And then you go into it, you're like, this isn't half of that. It's not even.
yeah. And just
So,
a
yeah, that's
real
a great
breakdown
point.
of what that is. So the lot rent is what gets capitalized to determine the value of the property. So if lot rent is, $300 a month, you would take that times however many lots and divide that by a cap rate, that the property's trading at, and that's the value of the property. Now, if you have $300 a month lot rent, but you have $600 a month park owned home rent because you're doing like a straight rentals, you don't capitalize the $600 a month fully like you would the $300 a month lot rent. And that's, it's getting kind of in the weeds, but I think at a high level, you just need to differentiate the two. Park owned home income and tenant owned home lot rent income are two different things. And then you make your comment on track record. I 100% agree. That's the number one thing you would look at. And, I think you and I got started because people took risks on us and they were rewarded for those risks because they took more of a chance. They were rewarded more, right? So like, if you're investing in a newer operator, you better be getting like best in industry, terms from the deal. And then, the experience part, all I kept thinking about when you were saying experience is, wow, I've made mistakes. I've made a lot of mistakes
Yeah.
and learned from those, right? Like I was doing a podcast a couple of weeks ago and I was saying like, we started with like a 50-point due diligence checklist, and every single deal we've bought, we've added something new to that checklist. So it's up to like 300 checkpoints now. So it's learning, and it's, having sewer issues, kind of like the ones you had, which I've had the same issue where we should have scoped the lines and we didn't, trying to save money up front. But now it's like, no, we're going to do that
We're doing
every
it.
single
This is
time.
happening.
Not even, because then you find out stuff and you can negotiate with the seller while you still have leverage to get a reduction. Or, hey, I did the scope. It cost me $3,000, but there was roots in the lines on this lot and this lot and this lot. Mr. Seller, I want you to go ahead and jet those lines and get them cleaned out before we close, right? That's a very clean ask of a seller. But then after the deal is closed, you can't do that. But those were some good points there. So let's just talk about this briefly. With the way the economy is heading, with way higher interest rates, and everybody's just kind of questioning what 2023 is going to look like. How do you think specifically mobile home parks will fare during this impending recession?
If you look back in history, and again, I haven't gone through previous recessions. I'm new to the recession game, but I've read a bunch about them. And if you look at previous recessions, mobile home parks, I think they fared at the best when you're talking about asset classes. Mobile home parks are the most recession resistant, which when you think about it, they're the cheapest, most affordable form of housing. Housing is the very building block of life. It's the first need that you get outside of food and water is housing. And so it makes sense that mobile home parks are one of the most recession, if not the most recession resistant asset class out there. So I don't think mobile home parks are going to be affected that much. With the stuff like I own, it's a hybrid between mobile home and RV. Even that, I don't think it's going to be affected that much, although they will be affected more because it's a lot easier to drive an RV out of a park than it is to get an entire home out of a park. But on the whole, I don't think they're going to be affected that much.
Yeah. And what do you think about like when people say, hey, your tenant base are the most fragile, right? Like they're the low income, tenant base, they're the low income people that like are most affected in recession. So how do you think that will play out?
Well, if you got, good operators, they'll know how to help their tenants. So if we ever have a tenant who's fallen behind on rent, we have contacts with our housing authority, and we give them the contact information. We are on first name basis with the person in the housing authority, and we just call them up. We're like, this person needs help, and then they can get assistance. And so if a person is in your park and they're running into financial issues and you're a good operator, you're going to help them stay in your park. And then the other thing, obviously, is not to jack up the rents during a recession, because that can that will, if they're more price sensitive, then that will definitely affect their daily life.
Yeah, those are two really good points. Thanks for sharing that. And that's one thing also when going back to the eviction conversation, as a park owner, same thing in storage, right? Like you never want to evict or auction off units, right? When you auction off units, everybody thinks, oh, you make all this money. No, you almost always lose when you auction off a storage unit.
Yeah.
And when
it's
you
all junk.
and it's all just junk, right? And then same thing in mobile home parks. When you have to go through an eviction process, you're never going to get that money back, right? Like you're losing all of those costs. So we do the Cash for Keys program where we literally say, hey, before we file this eviction and go down this road, hey, we'll pay you X amount, whatever that is, because we're going to pay the attorney that amount anyways. Yeah. So we'll give you till X amount of days to get your, we'll even ask them, hey, how many days do you need? Yeah. Okay, we'll give you X amount of days and we'll pay you this so that you got a soft landing somewhere else. And that is just, like you said, you want to try to help them all you can, but then at a certain point, the Cash for Keys becomes a viable option. And that's why we almost never get to the eviction process, because it's not a win for anybody. It's a lose-lose. But Gabe, we're running a little long on time here. Last question, what does the perfect mobile home park look like in your eyes from your time in the space, and why?
The perfect mobile home park, I guess it depends on whether you're buying the park or owning the park. If you're owning the park, then it's a 100-unit mobile home park that has paved streets, street lights. Everybody's got their own mailbox, manicured lawns, all that stuff. Just a beautiful, beautiful mobile home park. If I'm buying it, then it is a 100 space mobile home park that's kind of it's in a good area town, but it's rougher. It's got some abandoned homes in there. It's got some issues, some hair on the deal, and it's a seller who's very willing to negotiate seller financing.
I love it. Well, congrats to you and your success, Gabe. If any of our listeners would like to get a hold of you, what's the best way for them to do so?
The best way to reach out is just check out the podcast website. It's therealestateinvestingclub.com. And then if you want to email me, it's just Gabe at therealestateinvestingclub.com. And that's it. I appreciate you having me on.
Yeah, thank you so much for coming on the show today.
Absolutely.
That's it for today, folks. Thank you so much for tuning in. Would you like to see mobile home park value add projects in progress? If so, follow us on Instagram at Passive MHP Investing for photos and awesome videos from our recent mobile home park acquisitions. Once again, that's at Passive MHP Investing on Instagram. See you there.